with Cathie Wood of ARC Investment Management and Michael Schoenstein of Grayscale Investments. I want to start off right away by cutting to the chase with having two great panelists like you. I want to get right to what you think, where we're going in the future. And Cathie, I'm going to start with you with a tough question. As a strategist, I always look forward, okay, where are markets going and why? And the key things, the key inflection points that really kicked in for me this year was when the world's largest automaker by market cap, as we know who that is, Tesla, started allocating some of its wealth to Bitcoin. And since that's happened, let's see, Tesla's up about 35%, Bitcoin's down about 15%. Now, I'm a strategist. I'm always looking for things to kick in and make the market look different. But one thing that's really I look at is volatility on Bitcoin has dropped to the lowest ever versus Tesla, depending on your measurement, looking 260 days or so. But you're an investor in both of those spaces. And that's why I want to start out is what's your thoughts about what I just said? And if you think I'm an idiot, please say that. And looking forward, what's your thoughts, most notably for Bitcoin and potential that relationship with the world's largest automaker?
Sure. Well, we're, as you know, very optimistic on both. I think the biggest surprise to us in the last year, we expected institutional investors to start moving into Bitcoin. On that score, MassMutual was a surprise, a positive surprise. To think about all the hoops that MassMutual had to go through to put $100 million on its general account, even though it's 0.001%. They had to go through a lot of regulatory hoops. So that was a big surprise, or a positive surprise, though we expected institutional investors to start moving in. What we did not expect from institutions was, the diversification on their balance sheet, diversification of their cash assets into Bitcoin. That has been a positive surprise that we think is going to continue. We think that and there's another thing that we think could come out of this related to it. You think about 60-40 when you talk about balanced accounts, 60% equity, 40% bonds. Well, look what's happening to bonds right now. Talk about the need for diversification here. If we are ending a 40-year secular decline in interest rates and are even just flattening out or moving up slightly, that asset class has done its thing. What's next? And we think crypto could be the solution there.
Well, I want to transition to Michael. Now, my key thing you said was if. Why should we be ending a 40-year trend in lower rates when I look at it, this is one of the most significant deflationary periods I've ever seen. Like you pointed out in your radio interview the other day about, the average cost of an EV is going to drop to $18,000 a gallon, per unit. And I look at things like natural gas, the best indicator of deflation ever seen, is down 80% from its highs and just can't go up. I'll transition to Michael with that in a second, but why would we, I look at it as trend's your friend, why should we end now, end that trend of lower rates?
Right, well, I think unless we're going to negative rates or, the spreads have come down so low, treasury yields are so low because of quantitative easing. I don't think rates are going up a lot. I agree with you. We are in a deflationary environment for two reasons. One is massive innovation, which is technologically enabled and deflationary in nature. And then the second is creative destruction, which is caused by disruptive innovation, forcing highly leveraged companies to cut prices to support their debt service. So we see those two coming at us, yes. But we do know there's a concern, given all of the quantitative easing and the unhinged monetary policy. There's no rules-based monetary policy out there, except for Bitcoin and crypto. So we think this diversification makes sense in terms of cash, but fixed income has really done 40 years of very hard work. And sure, we'll be in a deflationary environment, but if Bitcoin represents a new asset class, why not move into it?
So thus part of your investment in Grayscale funds, which is where Michael kicks in.
Yeah, I mean, Cathie hit the nail right on the head. If you boil down her commentary, which is spot on, if you're an investor in today's environment, you are having to navigate an environment unlike we've ever seen before. Not to mention, there are investment opportunities that are now available that have been related to the birth of entirely new asset classes like cryptocurrency. And it's great to see forward-thinking investors like Cathie and her team embracing that. I think certainly thinking through the macroeconomic policy that we've seen in the wake of COVID, that has been something that has resonated very meaningfully with our institutional investor audience. The fact that assets like Bitcoin are verifiably scarce, and thinking about that quality as compared to perpetual money printing is a very large juxtaposition. And when you have people like MassMutual and you have corporates like Square and MicroStrategy and now Tesla, these are companies that are being led by forward-thinking entrepreneurs. The companies themselves are innovators and disruptors in their respective fields. We're not surprised to see companies allocating to this asset class on their balance sheet, and the snowball effect that it has had of providing additional air cover for additional investor participation is not to be understated in the least. And I think over the course of 2021, we're going to see even more corporate participation in this asset class, because really the career risk has gone from why to why not. And these are long-term strategic allocations for a lot of these types of investors.
Well, Michael, my colleague Eric Balchinas and James Seyfert pointed out that the Grayscale Bitcoin Trust, if it was an ETF, would be the top 2% of volume and asset flows on the planet. I think that's part of the innovation, including from the ARK Investments. But the key thing I also see is a major shift. I like to compare fund flows in that GBTC versus outflows lately, and the total holdings of gold. And I see that trend kicking in. Like today, you see gold down almost 2%, and Grayscale Trust up almost 2%. To me, this is a trend that I'm worried about accelerating. Are you sensing that and seeing that? But flows are certainly going that way.
There is little doubt in our mind that it is of not, any kind of coincidence that Q4 of 2020 saw some of the largest outflows on record from gold investment products at a time when Bitcoin, really broke out and hit some of its new all-time high prices. And certainly this narrative around Bitcoin being a digital gold or a digital store of value is a pretty widely held narrative now around the investment community. And so thinking about the popularity of Grayscale products, or really just the ability to gain exposure to digital assets in the form of a security, I think really represents just how much market demand there is. Because as we look at the pipes and the maturity of the digital asset ecosystem, I'm sure you and Cathie will agree that this rally feels very different than the one we experienced in 2017. But despite its price run, is still ripe for opportunity because crypto still largely exists outside of their traditional channels where investors are making, investment allocations.
So a question for both of you, and that I've heard a lot in the chat, Cathie, unless you want to comment on that.
No, I was just going to say what's striking is the dollar is down. Just take today's action. The dollar is down, which is normally a positive cue for gold. Gold is down at the same time. Bitcoin is up. That's very interesting. And I also think that the dollar having dropped on a trade-weighted basis by 7% last year and now resuming that downtrend is another stimulus. It should be a stimulus for gold too, but it is clear at the margin that Bitcoin is getting the flow that, the incremental flow that normally might be going to gold.
Well, to me, that's a key point that's happening lately. I mentioned this on live TV, and sometimes you get the pushback. It's like, oh, that's the trigger I wanted. I see Bitcoin, certainly today, potentially transitioning to the risk-off asset. I mean, funds are flowing from equities, i.e. Tesla, from bonds, from gold. And you look at days like today, bonds are down, stocks are down, Bitcoin's up. Is that a potential here? Are we kicking into an inflection where Bitcoin maybe is a risk-off asset? It's, Tina, there's no other alternative.
I think we're in such early days here. When you think that the market cap or network value of Bitcoin is roughly $950 billion, think about that in the in the context of an Apple. It's less than half of Apple's valuation. And here we're talking about the reserve currency of the crypto asset world, the first global digital monetary system. It's a very big idea, and now we have institutions moving, embracing this idea, or at least using Bitcoin as a hedge against what could go wrong. And so, as you say, Mike, there is a risk off. I mean, when you think about it, cash is supposed to be the ultimate risk off asset of choice. And here we have Bitcoin serving that role. It's very interesting.
I think it may be early to say it's risk off though, Mike. What I would say though, what we're seeing and experiencing from investors is that it's not necessarily only going to be those momentum traders or folks that generally only invest in technology or technology related investments that have become excited about allocating to crypto. Thinking about our investor base, we're really starting to see allocations across investor mandates. And it's not just global macro folks for whom crypto now could certainly be considered to be part of the ways in which they invest in their investment mandates, but it's really moving towards even value investors, risk arb investors. It really runs the entire gambit. And I think, you know, the reason why I say it may be early to call it risk off is because it's now generally going to be accepted as something that everyone can evaluate as an investment option, but I still would say it's not necessarily something that's going to be appropriate for every investor out there.
Well, that's a good point. Clearly, go ahead, Cathie, sorry.
No, I agree with Michael on this. We are so early. That $950 billion market cap gives you a sense, or network value gives you a sense of how early we are, and the various use cases that we have written about. Yassine El-Mandra, our crypto analyst, we've got the white papers on our site, arkinvest.com, has delineated as institutions move in, where an appropriate asset allocation will be, given risk and return parameters, various ones. And we also have dimensioned the use cases, the insurance policy that this represents against not only unhinged monetary policy, but outright confiscation of wealth in other countries, demonetization, trade settlement. When you aggregate all of these use cases for Bitcoin and assume a conservative allocation, let's say in the terms of cash or insurance policies, you do get into the trillions of dollars of market cap potential out there. So very early days.
I think that's a key word I want to expand on, is early. And I really appreciate you saying, Mike, it's early to say it's going risk off. That's my job, is try to figure those things out ahead of time and watch the little fund flows and everything. And I need pushback, because when everybody agrees with you, it's a lesson you learn as an ex-trader, then you're usually wrong. But I want to bring in a key point about early days, and it's these dangling carrots that keep me very bullish, and that is ETFs in the US. And I didn't say singular, it's plural. Obviously we have in Canada. Now, this is a question for both of you, and it's something that comes up in the IB Bloomberg chat all the time about this Grayscale premium. And I've been pointing out forever, here's the 200-day moving average of the premium. It's going down with maturity and everything. But what's happened in Canada with the advent of the ETFs is some of the other trusts have gone to a discount. So both of you, certainly you, Michael, and you, Cathie, as an investor, is that a potential risk with GBTC, which is now one of the most widely traded I would say exchange-traded products compared to an ETF in the space?
Yeah, I mean, it's certainly a risk, no question about it. But ultimately, price discovery in GBTC every day is driven entirely by market forces. Mike, to directly answer your question, an ETF here in the US is something that we've long believed is a matter of when, not a matter of if. As you know, we spent the better part of 2017 looking to register GBTC on the NYSE as an ETF, made tremendous progress with the commission. And I'd say actually the commission has done a fantastic job engaging with us and other folks within the community. But they have still cited some different dynamics within the digital asset market and Bitcoin specifically that have not yet matured, that they would want to see in place before they could get comfortable with an ETF. And so while we're definitely encouraged by the growth and the adoption, the development of derivatives, a much healthier two-sided market, and a lot more participation, those aspects still remain largely unfulfilled. And over time, we have to remind ourselves that this asset only came about 12 or so years ago, and so we're still, again, back to our last comment, in very, very early days for it.
Yeah, I think it'll be very interesting when Gary Gensler comes in as chair of the SEC. He spent the last few years at MIT. He's a student and a teacher around Bitcoin and blockchain technology. And the director of research for crypto at SEC has been promoted to report directly to the chairman. So I think we're going to see a lot of attention on it, and the people who are focused on it really know what they're talking about. I think the early days of the SEC, there was like, we're not quite sure what animal this is. Okay, now they are sure, and that's very healthy. I think it's positive for ultimately for approval of an exchange-traded product. And I think the most important thing, just think about what we're saying here. The risk everyone used to bring up to us when we first when we were first involved very early on with Grayscale, and still very much involved with Grayscale's GPTC. The risk we always heard, the pushback was the government's going to shut this down. I think we've moved far away from that, and here we're putting into place a chairman of the SEC who's very familiar with Bitcoin, understands its value, and a research director on crypto whose background is more technology than finance. That's a terrific combination.
Michael, thoughts on that one?
I'm sorry?
Any thoughts on that? My sense is I'm too much of an optimist, but I really hope, and I think the U.S. is going to embrace this like we did the internet and regulate it. Like Cathie just said, potential risks to me, it's completely tilted the other way. If the U.S. is smart, they'll do the opposite of what China's doing, our arch rival now. Any thoughts on that with this embracing this space? Most notably, this is a decentralized, organically developed global reserve asset. It's not like all the other cryptos that are, someone else's project or someone else's liability.
Sure.
Like even Ethereum, product on Ethereum.
Again, I think given where we are in the life cycle of this, the fact that we now have tangible commentary and or policy related to this asset class from the SEC, CFTC, IRS, FinCEN, Treasury, it does definitely add some validation to the asset class's staying power. And I do think that all of the folks in each of the seats at those respective organizations certainly recognize the role that the regulatory regimes here in the US play on a global level. So to your point, Mike, about this being global in nature, decentralized protocols that are gaining adoption on a global level, certainly the US's stance and posture towards this is certainly going to be paramount. And I certainly know that they appreciate that the world is watching. And so to Cathie's point, having regulators, taking on new seats who are familiar with this technology, we're totally hopeful that they will continue to, if not broaden their engagement with the industry.
I just want to
think of, go ahead.
Oh, sorry. Make one comment on your focus on China, which I believe is apt. So Bitcoin, the Bitcoin blockchain is an open source technology, and China, mostly for capital control reasons, really wants to limit its exposure. It wants its own currency. I think this is a really important point because open source technologies, if you're going to isolate your country from all of this innovation, that's a problem competitively. And I've been thinking about that quite a bit, our competitive dynamic relative to China. And I also agree the regulators in the U.S., while they have been really not forceful in any way, they have basically stood back, and they do not want to be blamed for preventing the next big thing, in the internet, as you say. And I see there's a question here about the technology. Is this old? Is this going to be old tech? I think that the beauty of the Bitcoin blockchain is that its speed and cost are not, you've heard this before in the community, are not bugs. They are features. This is the most secure blockchain out there. And so the idea of digital gold in the most secure network in the world is really an important concept here. So no, it's not old technology. There are going to be other technologies, other blockchains for other use cases that will not serve the same purpose as Bitcoin, but I don't think that they will obviate Bitcoin's role.
I think
Mike,
that's
any
right.
thoughts on that question? Go ahead.
Yeah, I mean, as we think about the role that Bitcoin plays, as well as the adoption and the development of other technologies and digital asset protocols, I think for us, it's become quite clear that there is going to be differentiation amongst these protocols. And I often try and analogize it for a lot of investors to actually the precious metals family. Gold, silver, platinum, each exists side by side with different prices, different use cases, different addressable markets. And so if you think about that in the context of digital assets, there is a future state where quite possibly Bitcoin, Ethereum, Litecoin, all the various protocols that are continuing to gain adoption, the development of DeFi now, these are all different areas that are unlocking either value, creating savings, disintermediating the trusted system that we are now very, very much accustomed to being a participant in. And so it not necessarily is, in a lot of investors' eyes, going to be a winner-take-all scenario with Bitcoin, but also, to Cathie's point, the open source nature of many of these protocols like Bitcoin are really, really important to remember, because over time, as the technology gets challenged, as new features need to be added into the protocol, the open source nature of it allows it to morph and grow and mature and add additional functionality over time. And so again, given that we're in the early days of it and Bitcoin hasn't changed all that much over the last few years, that doesn't mean that the development community has slowed down at all. If anything, it's probably as robust as it's ever been, but there is a shared appreciation that Bitcoin hasn't somehow been broken or changed too much and is still thriving and growing today.
One thing I'll add to that is we watch the number of developers associated with each protocol. And with Ethereum, it's exploding. Bitcoin, the number of Bitcoin developers is still moving up, steady apace. Given the difference between the protocols and the networks, that makes sense to me. So one thing that I think we will need to focus on in terms of keeping sustaining Bitcoin's blockchain as the most secure out there is we will need to provide support over time as an investment community for the health and sustainability of this network. So I'm looking forward to getting involved with the community. I already have in some ways, because this is very important. It's a global monetary system. We've never seen anything like this before, and it's rules-based, and it's going to make the world a better place.
Well, I think that's well described, and I appreciate you bringing that out. And also you, Michael, mentioned the precious metals, gold, silver, platinum, palladium. As a strategist, I cannot look at gold anymore without considering Bitcoin, because I think the planet, everybody who's ever held and used gold in the past, who's going to allocate it, knows that if they don't have some of that in Bitcoin, they're at risk. So I want to bring out that key thing that I think about daily. I want to grab this from you. Is what are the key risks you are afraid of, we should be aware of in this space? And maybe we should start with you first, Michael, and then go to Cathie.
I think every day that Bitcoin doesn't die gives all of us greater confidence that Bitcoin is going to continue to fulfill its ultimate potential and promise. I've been involved in the space now for 8 years. I can't tell you how many times I've either been told or read that Bitcoin is dead, or somehow something has surfaced to become a Bitcoin killer. And so for me, I think one of the biggest threats is probably just education and the lack thereof. So when we are able to get in front of audiences like we are today, it's really, really, really important to kind of dispel a lot of these preconceived notions that a lot of folks have not shrugged off. People still say, you know, Bitcoin failed. I can't buy a latte with Bitcoin. You know, that's not necessarily going to be the measure of success for Bitcoin in today's world, in the developed world, where the financial services system candidly works pretty well. Is it as cheap or as fast or efficient as it could be? Obviously not. But the real world, the real developed world use case around this is really around a digital gold or digital store of value. And so one of the things that I think we're very committed to is education, and particularly education for policymakers. You know, there's a question here about Janet Yellen's comments on Bitcoin. And so, you know, recently Grayscale donated to the leading think tank in DC called Coin Center, which is really not only developing, you know, some of the best thoughts and practices around how to innovate and ensure that as regulators are often furnished now with policies, or bills related to digital assets, that they don't dismiss them based on their lack of engagement or understanding of them, but rather can really approach them in a really informed way. And so I think regulatory clarity is something that we've achieved and is not stopping investors from participating today. But we actually view this as further regulatory clarity actually being an opportunity that can continue to substantiate the asset class and help it actually kind of foster innovation around it.
Yeah, and I'll add another element that Janet Yellen brought up, I guess now Treasury Secretary Janet Yellen brought up, was the environmental risk. And that's the pushback we're getting because of the movement, the ESG movement out there, which has, maybe the SEC is questioning it in the US, but in Europe, it is very strong movement. And again, Yassine El-Mandra, our analyst, has dimensioned the kind of energy use in gold mining and the energy use in traditional financial services, including trade and settlement, right? And Bitcoin's energy use compared to those is a fraction. And if you look at where the energy use is, a lot of it is around hydropower and other renewables, but particularly hydropower. So again, much cleaner than traditional businesses running on electricity. So it's been interesting that has become such a focal point. I think this is part of the whack-a-mole. They've been losing, and so this is the next mole. And I think it's easily countered in terms of narrative.
Exactly. There should not be a narrative somehow, Mike or Cathie, to her point, that Bitcoin is somehow heating up the globe. That is not the case at all. To Cathie's point, we're seeing mining being concentrated around renewables, hydro, and often actually utilizing power that would otherwise go wasted on the grid. So, not something that people should sink their teeth too far into.
I love that narrative of solving the problem of natural gas flaring, which I'm sure people can Google and we can dig into. So we have a few minutes to give us a little extra time. Let's do final words. So Cathie, let you go final. And Michael, how about any final words you want to leave the audience with? We've got just a few minutes.
Final words in terms of how we see Bitcoin evolving here. I'll start by saying, there are a lot of people I've paid attention to in my career who are looking at, this is going to surprise people because we're so fundamentally driven, but who are looking at charts. And I know that the Bitcoin world really got its big start around hedge funds and traders, commodities traders in particular. I heard at the beginning of this year someone I trust who's got both a fundamental bias and a technical bias when it comes to charts. He said, I've never seen this before. He said, this asset peaked in 2017, and normally, just based on the charting that I do, one would have expected the next peak or it to take off in about 10 years. In the meantime, it would just lay fallow. That has not happened, and that is because there are some important use cases around mitigating the risks that we're all facing. And so again, the big surprise to me was a substitution for cash on balance sheet. So you can say partly risk off, but really insurance policy. And I think that's a lot of what we are seeing right now. That, as I think Michael said earlier, decision makers have to have a point of view here. They cannot just whack the mole again because they're running out of moles.
Michael, you have 30 seconds.
That's well said. I think, Mike, if someone had told anybody to buy Apple or Amazon stock a decade ago, back then people would have said, those were very strange business ideas, very strange companies. But today, those types of businesses are visionary. And so I'm not necessarily talking about Bitcoin or blockchain technology necessarily becoming that with any sense of assurance, but what if they are? And so to Cathie's point about being something that can be, changing the world or not ignoring it, we are kind of tasking with investors of, number one, digging in on the space, and number two, making sure that they're not ignoring it. So don't let this once in a generation opportunity pass folks by.